Hi everyone, today we're going to be talking about Aston Martin stock, which is a stock that a lot of you guys have been commenting down below asking me to cover, and I thought I'd cover this one today. So as always, if you comment down below the next UK stock that you want me to cover, please do that, and if the stock you want me to cover has already been commented, then like that comment so we don't end up with like 3 people saying like Greg's. I always look for the one that has the most thumbs up, so make sure that the comment that you're going to post for the stock you want me to do isn't already there. And with summer starting to come around the corner, I have lost the Elise hoodie at last. I just thought I'd change it up a little bit. And as always guys, if you can smash that like button, it really helps the YouTube algorithm and gets the videos and channel out there, which really keeps me motivated to make the videos. I do it all for free and kind of share all this advice for free. I don't monetize the videos at all. And it really helps this channel pop up on the YouTube search engine and brings more people in. So that's all I ask for. If you can do that, that's absolutely amazing. So Aston Martin is a stock that IPO'd not so long ago. It's a ticker symbol AML, and it's currently at a big massive discount. It's a 91% discount, and since the IPO this stock chart has only gone way, it's only gone down, and these are quite a lot of reasons for that, so we'll be getting stuck into that in the video. What I'm going to do is I'm going to cover some of the fundamental side of it, like the growth and the balance sheet, and then I'll get stuck onto some of the stories that are going on with like Aston Martin and if it is a buy. So the stock is obviously down quite a bit. According to Simply Wall Street, it's still classed as being overvalued at these sort of prices. When we look at the past chart growth of Aston Martin, there is only 1 year where it did actually post a profit. The rest of the years it has been negative on the EPS front. Revenue wise hasn't been too bad, but definitely one big red flag is that it's currently not making profit. And when we look at a future chart, the revenue growth isn't too bad. The big worrying thing here is the EPS, and when we look at the past EPS and the future EPS, it is still not forecast to make profit in the next 4 years, 5 years, and also because of it not making profit beforehand, it's a little bit worrying to see that we're going to be investing into a company which at no point is going to make a profit. And also with that kind of negative, it leaves us to the kind of like question of what is the balance sheet like? And what's the point of investing into a company that doesn't make profit? Because if they don't make profit, then more than likely they're going to have to eat through the cash on the balance sheet, and will they eventually get to a point where they need to raise cash to even stay afloat? So when we look at the balance sheet on Aston Martin, it is a pretty horrible balance sheet. The debt is like 9 times the cash. Something around there. The cash is not covering the debt that much at all, and a lot of that cash has only just been raised as well, so that's a little bit of a problem. So as we look into this company and we see that the EPS isn't going to be profitable for quite a while, we see that there's not a lot of cash on that balance sheet. That's a little bit worrying. It seems to say that Aston Martin is in a bad position right now. There's not a lot of cash on there, and with them not making profit and not having profit for so many years going forward, it means they'll have to go and raise more cash. And definitely one of the big things that we've learned over kind of the last 2 months is how important a good balance sheet is to a company. And when we look at Aston Martin, which is a company not making money, not forecast to make money, and also has a horrendous balance sheet where it's going to raise more cash, this is kind of a really big red flag to start with, which is kind of worrying for the stock. Now the counter argument for this is that the stock is reflecting that on a discounted price, and it has fallen down absolutely huge. Another thing is that it has the DB11, which will be quite successful because it has its links to James Bond. Hopefully that the DB11 will help push sales with James Bond. Also there's the DBX, and they're hoping that pushing into a different kind of sector in the car industry will really help them, and the DBX is hopefully that for them. I have to say, when I did look at the DBX, I did like it. I just thought it was really expensive, and I think that maybe it would have been better to go down with a lower price just to compete with Range Rover slightly. I did kind of find like the price a little bit worrying on the DBX, but it is good that they're looking at avenues where they can try and make more money, and hopefully they'll be able to push revenue up to make profit. Now there is 2 investors in here that have caught the headlines. One of them is Toto Wolff, I think that's how you say it. And basically he is kind of like the manager for the Mercedes racing team, and basically he bought a 1% stake into Aston Martin, and kind of having someone that's kind of involved in that kind of F1 industry is hopefully going to help them. And a guy called Lawrence Stroll, he has also done a lot of fundraising, and he's tried to get 500 million. Now the reason why they needed 500 million for this fundraising is because of the balance sheet, and basically the company was in a really bad position where they were going to go bust in the next 12 months if they weren't able to raise capital. Now with them raising capital, hopefully that will help them. It'll get the DBX up and operating. But the problem I have to say is that it's not forecast to make money this year, so in a year's time it looks like Aston Martin are going to be in a bit of a bad position where they are going to have to raise more money. Now the problem I've got with this is when we look at a company like Aston Martin who have a loaded debt balance sheet, and everyone knows about that and the trouble that they're in, and when we know that they're probably not going to make profit. The problem with Aston Martin now is that if you're a lender and Aston Martin come to you as a lender and go, can you lend us some more money, or can you lend money to us, and you know how bad that balance sheet is, you know that they're not going to make profit, it gets a little bit worrying for a lender, because they probably won't lend it because they know they're probably going to need more money even after that. And as well as that, if they do lend money to Aston Martin, they're probably going to loan it at a very high interest rate, and that's a problem for Aston Martin that take on more debt at a very high interest rate, and you kind of keep having problems like this. Now the money is to keep the company going. It is to try and get DBX up and operating and get sales from that. They are also going to be opening up an F1 team and hoping that if they have an F1 team, that'll also drive sales. Now there's two ways the company can make profit from here, and the first way is to cut down operating costs, and then hopefully you'll be able to make profit because you cut your operations down. But that's not what Aston Martin are going to go for, because they're going to increase operations with the DBX that's going to be coming out. The second way is to improve that revenue, and then hopefully EPS catches up, and with the EPS and revenue both growing, you'll get into profit, and that looks like the way they're going to go with Aston Martin, which is a little bit risky really, but at the same time it's probably the better way for them to go and do it, because they need to try and get to profit. That is the number one priority in my opinion. And my opinion as well with this is that when you buy companies that are at a point where they're not making money and not making profit, and the revenue growth, really want to see revenue growth exploding, going up, and EPS then exploding and making huge profitability. But even in the long run, revenue isn't exploding. Yeah, it's going up about 10%. EPS though, it's still not going to make profitable. You know, when we look at companies that used to not make profit, like your Amazon, your JDs, for example, you used to buy in them stocks because you knew that they're not making profit, but 2 years down the line, that EPS is going to start pushing really high. Look at this company. When I look 4 years, 3 years down the line, the EPS is barely going to break even. If they even do better than what we think they're going to do, even if they do that, EPS is still only going to be slightly above it. There's not a lot of reward here in my kind of opinion, because revenue is not going to explode. The EPS isn't going to explode. Yeah, it could go up if things go right, but at the same time, there's a lot of risk here, and the reward on the revenue and EPS side doesn't look absolutely huge. So overall, in my kind of opinion, they are trying to do right things and trying to get a lot more involved and trying to get that image of Aston Martin back out there. For me though, I'll be honest, I think it's just a little bit too late for them. I think there's so much debt on that balance sheet for them to handle. I think there's so much risk with this company. I don't even see them making profitability, to be honest with you. And if I do, I only think they'll barely just scrape profitability, and they'll definitely not do that for 2 years at least. So they'll definitely need to go raise even more cash, which is another problem with Aston Martin. So I think you can wait on this stock for sure. Just, you know, wait and see what happens if you do want to buy it, because it's not going to go up anytime soon for sure because of all this negativity around it. I think if you want to go buy a luxury car maker, go look at Ferrari, because you look at a company there that has a great brand, great profitability, revenue growth, good management. You go look at Ferrari. For me, if you want a luxury car company, go pick Ferrari up, because it is at a better place than what Aston Martin is right now. Overall, I won't be buying Aston Martin stock. For me, I think it is not in a great position. And like I say, I think there's a lot of risk with this one. I think there's a very high chance we could see it going bankrupt. So I won't be touching this, because it is pretty much a gamble really. I would even say it's a gamble with the odds not in your favour. So I would not touch this one if I were you. That's my opinion, guys. And like I say, if you want a luxury car maker, I would more look at Ferrari than this. And that's me talking about Aston Martin today, guys. As always, if you could like that video, comment down below the UK stock you want me to cover next. Subscribe, and I'll see you in the next video.